I'm still getting my bearings, even though it's almost halfway through January. My kids were off for 13 work days. That is more than 2.5 weeks, if anyone is counting. And I absolutely love what I do. And so, like, I don't stop working when my kids get off work or when we go on vacation. And I don't actually feel like I need to go on vacation from what I do because I love what I do. But I also love spending time with my family. So during vacations, it's always this a bit of a balancing act with putting attention on, my wife and my kids and my family, and also putting my attention on another one of my loves, which is helping people with their money. But at the tail end of this Christmas break, I think I've told you before, but once a year I take each one of my kids separately up to see my parents. My parents are in their 70s. I think my dad is 75, my mom is 73, and my mom's a stage 3 cancer survivor. So my rule is I see my mom every 3 months. I fly up there. And if she ends up in the hospital, I go up the next day to see her. So it's something we started. And I took up Bowen this time, and it was great. And, one of the things that I think is funny is how kind of math plays in to so many things in our life that we don't see. And that just kind of got me thinking to where we kind of do math and where we don't do math and where it's conscious and unconscious. And that led me into something that I want to share with you this week. Hey everybody, this is RC Peck, and this is my weekend podcast. It's so great to have you here. It's the second one for 2017. I will not keep counting which one this is for 2017, but I am shocked that we're almost halfway through the first month of 2017. I still have not gotten used to writing the 7 after the 201 for 2017. So the theme that I really want to share with you is this idea of math and where math helps us and where it can hurt us and where we use it and where we don't use it. And when I thought of math, I actually thought of the stars, because one of the places that Bowen and I went this past weekend in Seattle was the Museum of Flight, which it's not a NASA museum, but when you fly, you use math. And they have one of my favorite planes, jets on the planet, which is the SR-71. And it's one of the ways that my son Bowen and I bond. We're always watching videos about the SR-71, and they have one up at the Museum of Flight in Seattle. If you don't know what the SR-71 is, SR-71, it is the fastest, highest flying jet ever. It's no longer in production. It was from the 70s, which in that alone, that's probably worth a topic. Why did we have so much technology in the 70s that has not been repeated today? But back to math. So math's in so many areas. And one of the areas where math affected me this past weekend was, I am not kidding, every time I've gone through security at the airport, the TSA security, I am arbitrarily flagged to get a pat down or go through one of those other weird machines. And it is the third time I've gone through and the third time that I've been randomly selected. And I just was laughing. First, I was angry, annoyed, but I was like, oh, here's math again. And the woman actually said, you've been randomly selected. So I'm assuming like every 50 people, so there's that math thing again. Like they need to prove that they are randomly selecting people. So I kind of was at the effect of math. And before there was GPS and smartphones, we humans used the stars, though we weren't thinking math to navigate the world. But there's one piece of math that's not being used, and it's a piece of math of what big box advisors are actually costing people. And this weekend, I was talking to a stranger up at the pool that my parents are part of, and I was just talking about the cost of what a big box advisor is. And I said, look, in my 20 years, in my 2 decades of working with people and looking at what the actual cost is, what the actual math, and this is not all the math, this is just part of the math of what a big box advisor costs. I said, usually it's around, I gave a range, it's between 2 and 5% total cost per year. I said, but let's just take the low end of 2%. Some people say it's higher, some people say, no, it's not 2%, it's 1.85%, but I'm going to go at 2%. Because it is the low end of the range that I've noticed the cost of using a big box advisor is over my research over the past 2 decades. And so what I have here is a price chart for you. And the blue line is what I call your free rate of return. You can buy this. It doesn't cost you anything to buy. You can buy it monthly, and that is the S&P 500 with dividends reinvested. It is straightforward. It is simple. It is easy. It is ruthlessly straightforward, simple, and easy. And yet most people don't do it. And I get why most people don't do it, and I'll get to that in a second. But there is clear math that one thing, just buying the S&P 500 and reinvesting dividends and doing it consistently, monthly, automatically, is the blue line. The red line is big box advisors' returns over the exact same time period. We're looking at about 17 years of data. It doesn't really matter what 17 years I would have pulled. I just pulled the most 17 years. It was just the easiest to pull and the most recent. And what strikes me is it's hard to see the difference if you don't visually look at it. I mean, this is one of the things I love about price charts, but the human brain is that we are a pattern recognition system. When we can put information into an image, it becomes very clear what is going on. And in this case, I just want to point out the cost. It is very clear that the cost of using that big box advisor in math terms is the difference between your money going up 85% in the last 17 years or your money going up 158% in the last 17 years, right? So the difference between 85% and 158% is not trivial. It's 72% percentage points different. Different? It's a significant and noticeable difference. I mean, you can see it here visually, all right? But it's hard to see it at any one time. And in fact, even when it starts, the difference is small at first, but over time, that 2% difference builds up, that 2% difference builds up, the 2% difference builds up, the 2% difference builds up. And it builds up over time. And it's the buildup over time where math really starts to really support or hurt someone's future. And I wanted to show this because I like the beginning of years. It gives time to reflect. It gives time to notice what is the most important thing. Where can you give gratitude? What should you be noticing? What should you not be noticing? And I'm not a big New Year's resolution. What I typically do is I just look at my calendar and say, okay, how am I going to change my calendar to get more of what I want and less of what I don't want? But with this, again, this is just an image of saying, okay, let's look back and see what this one thing does. And I know a lot of you listening do not have big box advisors, but it's always interesting when people defend their advisor. And you don't need to defend anyone. You don't need to defend yourself. All I'm asking you to do is just notice that when people start doing the math, it does start to add up. And this, whether we're talking about any of the assets, right? Whether we're talking about stocks, just so you know, stocks still, the path of least resistance is higher in the U.S. Still, U.S. stocks are doing better than international stocks. If we go over to another one of the main asset classes on the planet, currencies, still the U.S. dollar is the strongest currency on the planet. The U.S. dollar has broken out of its almost 2-year channel. It is looking like it might fall over. If it does fall over, that will be very significant for it to come back in. And it will help commodities a great deal. If it stays above that breakout, it's going to put more pressure on commodities and gold. But as I've talked about before, and I always forget whether I talk about it in a public forum or in my membership site, gold is just falling against the dollar. It's actually not falling against other major currencies. The second major fiat currency on the planet, or I could drop the word fiat and just say the second major currency on the planet is the euro, and it's been doing well against the euro all through 2013, 2014, and 2015. So it's in its 4th year of doing great against the euro. So perspective is important too. Math is important. And those are 2 of the major asset classes. Bonds is another major asset class. And bonds continue to be in a long-term uptrend. I've talked that the 10-year Treasury has gone sideways for 5 years, but we need to see. We need to see what's going on. But the reason I'm bringing this up is because you can look at price charts and you can get really clear. And to be ruthlessly simple with math and clarity and pattern recognition are some of the things that can help you take back control of your future so you're not at the whims of the market and the manipulators, and whatever else is going to happen is to really understand math and look at the patterns and go, there is a better way. I want to know what that better way is so I'm not at the whim, so I can take back control of my money. And that's what this price chart's about, really, is about taking back control of your money and your future and your portfolio and your security and your freedom and your choices in your future. That's what these conversations are about. But here's the takeaway, or what is maybe one of the takeaways. So look, I don't think a lot of people are doing the math. And I know why they're not doing it, because it can be very overwhelming when you look at the math. But when you look at a price chart, the math is done for you, right? Because you didn't need to plug in all the numbers going back 17 years. You could, once you know where to look, and where I got that data was free on the internet, but you can see like, wow, big box advisors. And I'm setting aside diversification and whether you should have been in bonds or should not have been in bonds. That's whole other conversations. And rebalancing, all those things are the old way. They worked in the 70s. But it's very overwhelming to look at the numbers. It's not to look at a price chart. And a lot of people I think they're just saying, well, I guess it's good enough. Or, I don't know. So it's not, I guess, really painful enough to them, because they don't actually know the actual cost of what what a 2% difference can do over 5, 10, 15, 17 years. And in the case of the price chart just showed you, even if you're 63, you're going to be around when you're 80. You're still a long-term investor, right? And the difference between $1 million going to $1,850,000 or $2,585,000 is pretty significant. It's the difference of what you leave to your kids and the choices you have. And then the third is, I think, just people hope. They know things aren't going well. They just hope something is going to help out, work out, something outside of themselves. And that never changes. But here's my point. Here's the biggest takeaway. There is a better way. Turn on your pattern recognition part of your brain. That can do the math for you. And when you let the patterns, when you let price charts do the math for you, it becomes very clear, right? Because it's ruthlessly simple. Price charts have to be ruthless with what they leave out and what they include. And when you have that information, and when you can look at a price chart and you know how to understand it, which, by the way, is very straightforward, you start actually living into a different life. Hey guys, this is just another step in helping you protect your portfolio and your future. Until next time, which will be next week, this is just another step in helping you guys get everything you want in 2017. Thanks so much, guys, and I'll speak to you soon.